Hey, it's Stuart. I wanted to record a video about property plans. There's a lot of businesses, particularly buyer's agency businesses, that offer the service of preparing a property plan, and I wanted to talk about, whether it's worthwhile. Now, these property plans typically cost sort of $4,000 to $5,000, and what they'll do is they'll work out, what your financial capacity is, borrowing and cash flow and so forth. Work out how many properties you could potentially borrow to invest in, and then allocate those across a portfolio, and that might include a bit of geographical diversification, it might include different property types and so forth. And so today I want to talk about, what do I think about those plans? Are they worth paying for? Apologies for the leaf blower in the background. Anyway, so these property plans will typically include financial projections. So they'll work out, cash flow wise, what's affordable. They'll estimate your total borrowing capacity, and they'll spread that capacity across the property market. So essentially all your wealth is invested, all your investment capacity is put into property. And as I said, they will think about the different property types and locations. Of course, that's going to depend on their geographical footprint. So, if they operate in regional markets, then you're probably going to get regional property. If they're located in Brisbane and that's their expertise, then all your property is going to be in Brisbane. So you need to really think about that. But I talk a lot about holistic advice, and that a lot of financial decisions are multifaceted. For example, investing in property, you've got to think about cash flow, borrowing, taxation outcomes. How does it fit into your wider strategy, risk management? It's multifaceted. And so that's why holistic advice, I think, is a better approach, notwithstanding that I think most people would be better off investing or spreading their wealth across various assets, property shares, super, all the usual sorts of things. Now, of course, I've got to acknowledge, I've got a vested interest in saying property plans are no good because in our business, we believe in holistic advice, and that's what we offer clients. But I should say that about 10 years ago, I think, we used to offer property-only advice, that is, produce property plans. I stopped doing it because I didn't believe it created the best outcomes for clients. It was a very commercially attractive business. We had a lot of clients, a lot of demand for it. But as I said, my strong belief is that people should probably consider a variety of asset classes, and so I didn't think it really met that sort of ethos. So the big limitation, I guess, with paying for a property plan is you're not going to get any tax advice. You should only ever take tax advice from a registered tax agent, and most of these firms, can't think of one that's a registered tax agent, so you're going to need to go off and get tax advice. They can assess your borrowing capacity. They can't give you specific credit advice unless they hold an Australian credit licence. So that is, they can't say, look, we checked this with CBA, CBA is willing to lend you this amount, this is how we would structure it. So you'll need to go off and see a mortgage broker. It's not a big deal. I mean, most mortgage brokers don't charge a fee. And they can't talk about typically anything that relates to financial advice. So anything that relates to super or any other investments, shares and so forth, because you need an Australian financial services licence to do that. Again, most of them don't have that. Some do, most of them don't. So then what are you really paying for? Well, you're paying for someone to prepare some financial projections, and then tell you, you've got $2 million of investment capacity, and then let's spread that across 2 or 3 properties or something like that. I don't know, I think maybe you can do that yourself to some extent. Of course, there is some benefits of putting a property plan together. You've got to think about geographical diversification. So spreading your wealth in different capital cities makes sense. Not only because you get to smooth returns, but also you get to minimise land tax. So that makes sense. Also, maybe when you're constructing a property portfolio, thinking about different tenant profiles and different property types. Again, you can smooth returns that way and reduce portfolio risk, so that might be worthwhile. But I just think property plans have a limited scope. Anyway, next week, I'm going to record a video about what do you do if you're not ready for financial advice yet? Because I've created a problem for you. I said, I don't think property plans are worth paying for. So then where do you get the advice? I mean, if you don't have a lot of money and you're not going to necessarily need ongoing advice, like it's not worth you paying for ongoing advice, what do you do about that? How can you move forward? Well, I'm going to record a video about that and write a blog about it, in fact, next week, and I'm going to share that with you. But I just wanted to really talk about property plans today and let you know my thoughts on where the value might be. Hope that's helpful, and until next week, bye for now.